I think I had mentioned earlier that I really discovered what the secret was behind utility billing. And I found that out because, like my husband said, when we backdoor it, they'll have to take you on as a client. So we took on my properties, or my husband and I's properties. And one of the first properties we implemented this on, it was 36 units in San Diego. And my husband was really worried, like, what if all my tenants move out? Like, we need to make sure that we keep our occupancy levels high for our, debt requirements. Like, there's all these, worries that implementing a program like this is going to bring up.
Hello, Empower Nation. Welcome to Empower Her Money podcast. I am your host, Angela Duncan, speaker, best-selling author, serial entrepreneur. We talk all things money and business. Today's episode is sponsored by freemoneytipsbook.com. freemoneytipsbook.com. There are 7 unshakable habits that you need to know when starting your financial freedom journey. Today's episode, I get to interview Tiffany Mittal with Utility Ranger. We're going to talk about RUBS, what that is, and if you are in the multifamily real estate investing field, you definitely need to know what this is. It's going to help you create more income and more value for your multifamily investment. Hi, Tiffany. Welcome to Empower Her Money podcast. Thank you so much for coming on the podcast today.
Oh, thank you so much for having me.
Yeah, absolutely. So I would love for you to share with the audience, talk about your background and how you got into real estate investing and also Utility Ranger today.
Well, I got into real estate investing definitely by accident. My husband had been in the multifamily space. He pretty much grew up in the space. And I was transitioning my career. I actually used to own a day spa and hair salon in San Diego. And then I transitioned after 2008 financial collapse, sold that business, luckily right beforehand, and went back to grad school and decided I was going to help my husband with his apartments. And that was definitely an eye-opener for me of, what the possibilities were and kind of what the problems were people like my husband and I were facing. So I kind of fell into it, but now I'm happily in multifamily as an investor, former operator, and now a prop tech founder.
Yeah, that's awesome. It's such a different field going from a day spa to apartments or multifamily.
Yeah.
Yeah.
Well, I definitely think anything's possible, but it wasn't, it's definitely through the help of my husband and getting into his day-to-day operations. I realized the operations of multifamily is not where I wanted to be. It's, a lot of issues with tenants and, property management crews and maintenance, and it just wasn't in the field where I wanted to be at. But I saw so many issues kind of just within our daily operations. And I think I'm kind of a problem solver by nature. So, I said, well, how can I kind of not only get out of the operation side of this, but how can I solve some of these problems? And one of the biggest problems that we saw was our utilities. Our utilities were, increasing year over year, and we couldn't really raise rents to continue to cover it. And, I said, okay, well, how are we going to solve this problem? So you kind of look to what are the leaders doing in the space, right? And we learned about something called RUBS, or ratio utility billing, which basically is a transition from property paid utilities. So these are big master meter utilities. I'm not necessarily talking about power. Like, the tenants most likely have a direct connection to their utility provider, but this is like water, sewer, things that get billed to the property level, pest control, trash. How do you transition those from landlord-paid to tenant-paid? And the big guys have been doing this for years. And I said, well, why can't we do this? So my husband said, well, let's try. So we went to all these companies and said, okay, let's do this. We want to do RUBS on our properties. And they said, I'm sorry, you're just not that big. And unless you have 1,000 units or more in your portfolio, we can't service you. And I was like, are you kidding? Like, you're not going to take me on as a client. I'm offering you business and you're turning us away. So after about 5 door slams in the face, not really, but figuratively,
Mhm.
my husband said, well, you want to get out of operations. Why don't you kind of backdoor the system? Why don't you go work for one of these companies and figure out what they're doing, and let's do it on our properties? And so I said, hey, I think that's a great idea. And that kind of helped me with my battle of this operations was not really my cup of tea. And I had just finished my grad program. So I got a job at one of these utility billing service companies and helped grow that company from 100,000 to 20 million in 5 years, and really saw this rocket ship go off where, now the mid-size property management companies were starting to implement it. It was the big Class A and the REITs that had been doing it for years, but it was really filtering down into the, 1,000 to 10,000 unit portfolios.
Hmm.
And that's where we really shined, and I helped grow that business. But I really learned during that process what the secret was behind it. And that's really what I built my tech company off of.
Yeah. So first, I like that you realize what your skill set was. Operations, well, it's so important though, as a business owner, to at least touch each of those fields, because how do you improve your business if you don't know actually what's going on? But you were in that area, you learned that that's just not your skill set, it's not your gift, and it's not how you can necessarily help the company grow. But then you saw a problem, and instead of just, like, oh, we're going to fix this in our company, let me go learn first how other people are doing it successfully and then apply it to what we're doing. So I thought that was incredible for you to go and work for another company to learn and then bring it back to a level for the rest of us to be able to have access to.
That's exactly, I mean, I don't think that was my initial intention, was to bring it back for everyone else. I think, as most people who are trying to solve problems in their business, you're initially thinking like, how do I solve this problem for me? And then it was through that process, I think I had mentioned earlier, that I really discovered what the secret was behind utility billing. And I found that out because, like my husband said, when we backdoor it, they'll have to take you on as a client. So we took on my properties, or my husband and I's properties. And one of the first properties we implemented this on, it was 36 units in San Diego. And my husband was really worried, like, what if all my tenants move out? Like, we need to make sure that we keep our occupancy levels high for our, debt requirements. Like, there's all these, worries that implementing a program like this is going to bring up. And so, but none of that happened. Actually, we actually had more of a flurry of maintenance requests rather than a flurry of move outs. Because think about it, if you go to a hotel, right, and you have a shirt that you have to wear for a conference the next day and it's wrinkly, what do most people do? I mean, myself and most people I talk to, we all put it in the shower. You turn the hot water on, super hot, and you let it go. And you let it go for as long as it needs to be in there for, or as long as you, until you remember it's still in there. And you don't really think about it because you're just trying not to have to pull the iron out to iron your shirt. But, our tenants think the same way. And it was really what triggered this issue of us needing to do a transition to RUBS. It was one of our residents who called to say that the neighbor was leaving her water on all day. And when we sent our on-site manager in there, we discovered that, yes, not only was she leaving her water on, but when she got back from work, she said she was leaving it on because her dog had anxiety. And her dog had anxiety. She didn't want it to bark and disturb the neighbors. But you're like, whoa, like, I'm paying the bill here. It's that same kind of concept. It comes with the cost of your hotel, so you leave the water on. It comes with the cost of your rent. If you're not billing these charges out separately, people don't really think about it. And so it's not until our residents started getting a bill for their water was it, oh, well, my toilet's running. Oh, well, my faucet's been leaking. All of these problems that actually cause secondary problems, like your faucet's leaking under the sink. Well, now your cabinet's moldy and you have to replace your whole kitchen vanity or your bathroom vanity. It's all these other issues that we had a flurry of move outs because people were trying to hide pets in their apartment and they didn't want you in their apartment to notice that they were bringing in a pet or whatever. So the behavior modification was one piece of that. But that next year, we got 36,000 of additional revenue off of our 36 units, so about $1,000 a unit per year. And when we went to go refinance that property, Fannie Mae valued that property at $1 million more just for that 36,000 of additional NOI revenue, which is basically you're taking your third largest expense in multifamily apartments, which is utilities, and turning that into utility reimbursement and getting about 90% of that back. So you now are, that lifts up your net operating income. And anyone who's kind of in the multifamily game knows it's really, how do I hack my NOI, right? Because values are determined by your NOI, your net operating income divided by your cap rate. So every dollar that I add to my NOI has this cap rate multiplier on it, divided by your cap rate. So that you could take the 36,000 divided by a 4 cap. These are California cap rates at the time. And it comes out to over $900,000, which we were able to leverage the additional capital, pull money out, a cash out refinance, 500,000, and use that to put down on another property. And we were like, whoa, like this is really about forced appreciation. Yes, we're having our tenants behave and modify their behavior to be more conservation savvy or be more efficient in their use. So you're getting that on the property level. You're reducing your third largest expense, but on top of it, you're able to kind of increase the value of your apartment building, leverage that additional equity, use that as additional money to put down on another property, kind of creating a mechanism to grow using this forced appreciation. It really blew us away. And that's kind of how the whole thing started.
Yeah. And so when, you're not paying for something, you don't realize the cost of it. So I like that part of the story, because now that you're passing the cost of the water to the tenants, they're more mindful about their usage because it's coming out of their own pocket, which, it's crazy to think that years and years of living in apartment complexes, you're not paying for your own water, your own trash. But if you lived in a house by yourself, then you are paying for that. So it should have been your cost to begin with. And then on the flip side, like you said, as the owner, you've just added value to your building. So that cash out refi, buying another apartment complex is now you're building your generational wealth by charging someone something that they should have been paying for all along.
And people who are responsible for the use, really.
Yeah. Right.
And, a lot of kind of these smaller players, people who have under 1,000 units, this makes up almost half of the multifamily supply in the US. And these service companies won't service them unless you have 1,000 units or more in your portfolio. So you have half the country basically completely underserved, and they don't have the same kind of forced depreciation NOI hacking opportunity that the big guys have been using for years. So it wasn't actually until we saw this big increase, and I was telling my sister about it, who owns about a dozen units in LA. And she said, well, take me on as a client. And I said, well, I understand why I can't, because I helped kind of grow this business. And it's really a service-based business that, you're giving them your bills, they're sending them to your tenants, and they're collecting it on your behalf. Or you have property managers who don't get service, who just try to say, well, I'll just put a flat fee on the bill, and I'll just say, okay, 1 bedrooms get $35 and 2 bedrooms get $55. But even flat fees, that doesn't really solve the problem, because that just really is essentially a rent increase, right? Like, no matter what you do, your water extra charge isn't going to change. So that doesn't help you actually modify the behavior. You want the bill to float actually monthly with the actual, utility and how that floats. Not only are you more safe from a compliance side, but the residents see that, small fluctuation is what is triggering the modification of their behavior. So when my sister asked me, to do this for her, I said, well, let me just create this little calculator for you. And I'll show you how to mail merge this in, and you can send your residents invoices. And then I said, wait a minute, if I can create this for my sister and she implemented it, she's been doing that on her apartments ever since. Why can't I do it not only for ourselves, but do this for other people? And that's when I had the vision. It was actually back in 2015. I said, how can I take this service, model and turn this into just a software model where anybody who has, whether it's a duplex, whether it's 100 units, whether it's 1,000 units, that they can just stick in their bill amounts and click calculate and have the bills emailed off to your tenants. I mean, it's a fairly simple model but no one had really focused on how do I make this really easy and how do I give this to the everyday mom and pop investor so they don't need to go to these service companies and be treated poorly. And, these are really the heartbeat of America, are these kind of small businesses and mom and pop investors. Like, they need to be treated more fairly and given the same advantages that everyone else has, so they can force the appreciation of their properties, leverage that capital, grow their portfolios, create generational wealth. How are they going to get as big as the big players without these same opportunities? And so that's kind of how Utility Ranger was born, was kind of democratizing the space of prop tech, making this accessible for the everyday investor and owner and operator to have the same advantages the big guys have had for years, and use this as a mechanism to help grow their portfolio.
Yeah. And so also speaking to, someone who might be considering selling their property that doesn't currently have this implemented, talk about that a little bit.
So what's funny is, so my husband and I, we have about 130 units. Some are in California and recently moved out to Florida. And that's one of our main things that we look at. Everybody has their buying criteria when you're looking at buying apartments. And one of our buying criteria is we want to look for somebody who's not doing RUBS on their properties and instantly implement RUBS right after we buy it. So then we can have that instant equity or that instant value add. It's like another tool in your tool belt for value add properties. But I think people are starting to realize, wait, if I'm thinking about selling, why would I not implement this before I sell, right? So those opportunities to buy of people who haven't implemented it are definitely becoming smaller, because people are catching on, like, why should I not do this before I sell it? Increase my NOI so I can sell my property for more. Get the value before you sell. And then maybe they don't even want to sell at that point because they've increased the value, and maybe they can leverage that additional capital to grow without selling. But it's really a tool for anyone who is operating properties and they need a way to kind of transition their utility bills from landlord paid to owner paid, whether it's before you sell, whether it's after you buy something, or whether you're just operating your business day to day. How can I leverage this to really grow my net operating income, grow the value of my properties?
Yeah, love that. So are there any limitations, like state by state rules, that do not allow for RUBS to be added?
Well, most of the state regulations that they have around the country are regarding submetering. So what we are not is, we are not a submetering platform. The compliance around submetering would be a nightmare for the everyday owner to try to use. So in that case, I would say the best thing for them to do is go to a service company, so that way they can remain compliant if they want to do submetering. But really what you get in return between submetering and RUBS is negligible. So I say, why invest all the money and capital into buying a system that, is going to constantly have issues with failing and meter reading equipment and complexity? It's just as easy to do this mathematical equation to divide it up. But the RUBS, regulations around the country, most laws are silent on this. There are a few, I call them regulation hotspots around the country. And most of them are, there's a few cities in California. I think one's Santa Monica. I think now it's either West Hollywood or North Hollywood is a new one. San Jose has some regulations. Miami-Dade County, you can't do this in. But most of the country, 99% of the country, there's no problem, and there's really no law on the books about it, because without this, many properties can't actually even be submetered. Unless you're going to replumb your whole building, which is not really, something that investors want to be focusing on. There's really not a way to do it. So, this is your only option. So a lot of states have just really remained silent, because you have all these legacy property owners who would be negatively impacted if there were a law on the books about it.
Yeah. So say one of our listeners has a multifamily. What is kind of like the process when they come to you and they decide that this is something that they're going to add to their property? How difficult is it in the process?
Well, I would say the process in itself on the software is super easy. But the first thing that they want to do is they want to look at their lease language, right? Can I do this? You can't change people's leases in the middle of their lease, right? So the first thing you do is you change your lease language for any new person moving in, and you change the language from, the tenants are responsible for all their utilities except, I see this all the time, except for water, sewer, trash, right? Take out that language and just say residents are responsible for all utilities. That going forward, always consult with your apartment association in your region to check that. A lot of them have language you can use. And then immediately notify all your residents that upon this 30-day notice, or after the first day after your lease expires, so you're now going to have new change of terms within your tenancy. And your change of terms are going to impact your utility responsibility section of who's responsible for what. And that way you start to have this roll-off effect of people who go from, landlord paid to resident paid. But we've set all that up in the software, so it's really easy to do that. So you don't have to go back and check it each month. Everything will kind of trigger automatically. But you want to make sure you have the right lease language, check with your local apartment association, make sure all your new leases and your residents are notified of the change prior to implementing it. And then it's just setting it up and calculating your bills each month and sending them off. It's pretty simple on that side.
Nice. So what do you think is going to happen in the future for RUBS? Do you think this is going to continue to be more common? Any legislator might step in to say, wait, no, can't do this, or, what are your thoughts?
Well, I have a lot of thoughts on this, actually. You look at other industries, right? How do they deal with price compression? And the rental market has a lot of price compression. You look at California, that's gone statewide rent control, right? You have other states that are looking at these. This really impacts your ability as a landlord to remain profitable as all of these other expenses are going up. Not only are our labor costs going up, not only are our utilities going up, but just everything across the board is going up. How do you survive in this kind of highly regulated market? Well, you look at other industries like the airline industries. What do? They unbundled their baggage, right? You look at the hotel and resorts industry. What do? They unbundle the resort fee that we've all become accustomed to, right? So I really think that the future of multifamily is this kind of unbundled, like triple netting of apartments. Like, you're paying for the airspace and everything else is extra. You're already seeing this in the Class A space of apartments where they're basically saying that you're paying an amenity fee, and that amenity fee pays for many things, whether that is, Wi-Fi or the gym or access to the pool, whatever it is. These amenity fees are helping them pay for, this kind of price compressed market, and that will trickle down into, Class B, Class C apartments. It takes a little bit longer, but it kind of all starts at that Class A apartments because they're trying to figure out how do we deal with price compression. So I really think the future of multifamily is you're renting the airspace and everything else is extra. Everything that's occupant dependent, whether it's Wi-Fi, cable, water, sewer, trash, pest control, those things are going to be unbundled and residents are going to have to pay for that on top of their rent.
Yeah, I'm always amazed when the government steps in and tells you as a landlord how much you can or cannot charge for rent based on whatever number that they have decided is the normal number for the area. So
this is part of the reason we left California. Is it's really hard to be a landlord in California nowadays. And so you move to a state that has less restrictions and more of a landlord-friendly state, so you can survive with the model that you've created. And you might have to modify it a little bit. And these are one of those small modifications, right? How do I create more value in my current model? And that's kind of what this offers.
Yeah, the consequences too. I mean, what's California going to do with all these apartment complexes when people want to sell them because they're not profitable?
Mm-hmm.
Yeah, very interesting. And so you talked about Florida a little bit. Are you looking at investing more in Florida now?
Yeah, absolutely. We're heavily out there looking in South Florida. We don't actually buy in Miami-Dade County specifically because of their RUBS regulations.
Yes.
But really Broward County, which is Fort Lauderdale, and north, we live in Stewart, which is about an hour north of Fort Lauderdale. And we like to have kind of boots on the ground. We like to stop by, we visit our properties. So we want to buy properties that are close by, but we're looking throughout the state. And our approach is, a little bit different here than it is in California. You have to kind of modify things a little bit, but actively looking to invest and divest out of California.
Yeah, because Florida is still growing population-wise, so still
Yeah.
a good investment. Always looking at your numbers, but yeah, I agree. I live in Miami. I wouldn't invest in Miami either. Yeah, awesome, Tiffany. So I have a fun question for you.
Sure.
Um, if you could choose a superpower or a super talent, what would it be and why?
Oh, I mean, I would say if I could duplicate myself, lots of responsibilities between, investor, running a tech company, mom of 4 kids, my daughter's assistant cheer coach, like all of these things, you want to be everything to everyone, especially your family. And sometimes you just need more hands to kind of handle everything. So we're doing the best we can, running everything simultaneously. And, but if I could give myself some more hands or duplicate myself to take on some of the tasks, I would.
Yeah, and I mean, you're solving a problem. You're helping other investors. So, to create that kind of impact on their, generational wealth is just incredible. So I love what you do. I love Utility Ranger. I hope more people will find you. So speaking of that, what is the best way for people to find you, Tiffany, and to learn more about what you're doing?
You can go to utilityranger.com. You can also find us on any social media handle.
Yay, awesome. Well, thank you so much for your time today.
Thank you.
Thank you so much for tuning into Empower Her Money podcast. Hope you enjoyed this episode. Don't forget to subscribe, share this podcast, and leave a review wherever you are tuning in.